Hi, my name is Christian Waldegrave, Head of Research at Teekay Tankers, and this is our conventional tanker market update for April 2019. We're looking at what's happened in the tanker market this year. The market entered 2019 on quite a positive note. We had a good Q4 last year. In fact, it was the best Q4 since 2015. And a lot of that positivity spilt over into the early part of this year. We saw some decent rates in January and February. However, rates have come off fairly significantly since then through March and the early part of April. And that's due to some normal seasonality, but also some particular supply and demand headwinds that we've faced since the start of the year. So on the demand side, we've seen OPEC supply cuts since the start of the year. And that's really affected the tanker market, especially the crude tanker rates, as I said, especially in March and April. And those OPEC cuts have been a combination of two things. One, we've seen countries like Saudi Arabia and some of the other Gulf Coast countries being really aggressive on supply cuts and cutting over and above their target production levels that they agreed at the meeting last December. And we've also seen some unplanned outages in places like Iran and Libya, and particularly Venezuela. Venezuelan oil production started the year at about 1.2 to 1.3 million barrels a day. And in recent weeks, it's been as low as 0.6 million barrels a day. So Venezuelan production has been cut in half, and that's a result of US sanctions on the country. And that's really affected the Aframax and the Suezmax segments in particular. That US Gulf Caribs market for Aframaxes has really suffered due to a lack of Venezuelan cargoes. We've also seen, since the start of the year, some pretty heavy refinery maintenance. And we think that's because refineries are taking this opportunity to carry out some extensive maintenance and do some retooling ahead of the IMO 2020 regulations, which come into effect in January of next year. And then the third factor that's really hit the tanker market since the start of the year has been high fleet growth. So the fleet has grown by just over 2% in Q1, which is quite high fleet growth. And that's a result of two things. One, the order book for this year is very front heavy. We've got a lot of deliveries coming in Q1 and Q2. Just to give you an example of that, there are 33 Suezmaxes due to deliver into the fleet this year, and 28 of those are due to come in Q1 and Q2. So it's a very front-loaded order book. And we've also seen virtually no scrapping since the start of the year as well. And that's probably a reflection of the higher rates that we had in Q4 and the early part of Q1 have meant that owners have been less incentivized to scrap. So that kind of high deliveries in the early part of the year and the low scrapping has created a lot of fleet growth. So that's a lot of headwinds that the tanker market's had to deal with since the start of the year. The good news is that we think those headwinds are temporary in nature and that a lot of those will reverse in the second half of the year, and that we'll get a much better tanker market from Q3 onwards and into 2020. First of all, the demand environment remains very positive. The IEA is still forecasting 1.4 million barrels a day of oil demand growth this year, which is a positive number. But more importantly, we think the refineries are going to go all out in the second half of the year and operate at very high utilization levels in order to produce sufficient distillate to meet IMO 2020. So that's going to be a positive story for both crude and products. On the crude side, it means the refineries are going to be taking in a lot more crude in the second half of the year than they were in the first half of the year. And then on the product side, there's going to be a lot of new trade developing because of the need to ship the distillate from the refineries to where it needs to be. So we think the second half of the year will see a good demand environment for tankers, probably some more arbitrage trading, which is also good for volatility, and also possibly some additional floating storage requirements ahead of IMO 2020 as well. So that will help tighten fleet supply. Looking at the oil supply side, we do think that OPEC will start returning some barrels to the market in the second half of the year. As I said earlier, they've been cutting very aggressively in the early part of 2019, and we've seen a response on the oil price side. Oil prices just in the last few days have gone back to $70 per barrel for Brent, which is the highest it's been in 5 months. And at these higher price levels, we think that OPEC will be incentivized to return some barrels to the market. So we do expect Saudi Arabia and countries like that to increase supply in the second half of the year. We also expect to see an increase in US crude exports in the second half of the year. So US crude exports have been topping out at around 2.5 to 3 million barrels a day in recent weeks. and the US is struggling to export more, even though their production is going up because of infrastructure constraints in the country. However, the US is building new pipeline capacity from the Permian Basin, which is where the shale oil is produced, to the US Gulf. And two big pipelines in particular come online, one in Q3 and one in Q4. So we think by the end of the year, the US will be exporting closer to 4 million barrels a day of crude. And that's going to create a lot of additional demand for tankers. For mid-sized tankers, that means more Aframax and Suezmax demand taking crude from the US Gulf to Europe. Also, it will mean more lightering demand because for the exports that go to Asia on VLCCs, they'll have to be lighted from an Aframax vessel. So we do think that the demand environment for mid-sized tankers will be a lot more positive in the second half of the year as well. And then on the fleet supply side, as we said earlier, the fleet growth has been very heavy in the first half of the year, but the flip side of that is that the order book, once you get past the first half, is very small into the second half of the year and into 2020 as well. We do also expect an increase in off-hire time as we go through the year, because a lot of ships, especially in the bigger segments, the VLCCs and the Suezmaxes, there'll be a lot of ships taken out of service to retrofit scrubbers. So that will have a dampening effect on fleet growth as well. So when we get to the second half of the year, as I said, a lot of those temporary headwinds that we're facing right now, we think will reverse. And we do think it will be a very strong demand environment second half of the year. And that will really cause a significant increase in fleet utilization and therefore tanker rates as we go into the second half of the year and then into 2020 as well. A lot of the positive demand points that I've just said for second half of this year, we think will continue into next year. And the order book is also very small for next year as well. So we think fleet growth will only be 1 to 2% next year. So really we think that 2020 will be a very positive year for the tanker market. So that's our update on the tanker market, and we'll speak to you again soon.